We're ready to Masterclass, best time of the week. As always, guys, thank you for joining us. You're giving your time to us, and we like to give our time to you guys because we want to see you win first and foremost. Today, we're going over chart patterns, what we use the most, as well as go into questions at the end for those that have them.
Yep.
But first, we'll start off with the Discord itself. Read
Yep.
first. Kyle, God, you're having some questions there, so we'll just kind of go over that very quickly for you guys.
Yep. 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 Okay, cool. All right, guys. Welcome, welcome, welcome. I believe this is the first masterclass of this year. Am I not mistaken here, J Money?
I
I think
believe
so.
so as well.
All righty. Cool. Well, gonna kick off 2026 in style. Like Justin said, we're gonna be going over the chart patterns, most commonly used chart patterns that we like to see and use. But to start us off today, before we get into any charts and any patterns, we have some new names in the Discord. We also have some people that have been with us for a long time who, if I'm being honest, you guys should be honest too. I don't think any of you have ever been to this channel because there's a
Most
lot of
haven't.
questions, huh?
Most haven't.
Most haven't. All right. There's a lot of questions that get asked, and the answer is in this channel, right? So read first, right? Pretty self explanatory, I would think. Okay. I would think it's self explanatory. Um, read first. If you're new to the Discord, you should read this. Why should you read this? Well, what's it going to tell you? Okay. Well, it's going to tell you exactly how to read our Discord. Here's the Google Doc. You could go there. Okay. And then it's also going to walk you through step by step. Okay. It's going to give you a beginner course, the intro to options, right? You're going to have, and then you're going to understand, okay, if I'm looking at the Wolves University, there's education in there. We have options, watch list, trade, right? Psychological, supply and demand. Okay. Then we have more free additional information. We have a library with over, Justin, I forgot how many it is, but it is a lot of books in this library here, like thousands, 10,000 hours, something crazy like that. Okay. So you guys should utilize this. What in the world is happening? Okay. Sorry. You should utilize this. And then what you should do every single morning is probably check the announcements, right? That's where Justin and I will update every single morning what we're doing. Okay, after that, you'll be able to get into the pre-market huddle, or we call it the huddle, but the pre-market huddle. And that is a short 15-minute video, right? Not even 15 minutes. It's 15 minutes
It's about five, ten
till
minutes. Yeah.
what's that?
About 5, 10 minutes.
Yeah, 5, 10 minutes. It's just whatever we're looking at, but it's live with charts. Okay. And then we post a watch list shortly thereafter, right? So you guys can see how we're starting this out. You look at the announcements, you find the link, we post it in watch list. Then you should always check the earnings and economic data, which we go over on the pre-market huddle. Okay. And then before you even get started, you should go to the call out guide. How do we call out things? Where do they call them out? Okay. Okay. What does everything mean? Right? If there's a date, if there's a ticker, if there's a strike, what exactly all those mean? Okay. The price we paid, it explains all of that. Okay. In here. Okay. You can also go to a YouTube video. Okay. And then the most important thing after this, always come to the masterclass or try to catch the masterclass. That's every Thursday. We try to do it at the same time, guys. We are all busy individuals and we try to keep it at the same time. We always record it and post it for you guys to watch, but sometimes, like tonight, we had to do it an hour later. Okay. No problem. But it is always going to be recorded. You can always go back and watch. And where do you think we are going to post that? Maybe the tab that says masterclass. All right. When everyone says, where's the masterclass? It's probably in the masterclass tab. And if it's not uploaded yet, it hasn't been processed yet. We always start to process, guys. These videos on Thursday nights can be a little long, right? They can be a little long. And so they take a little while to process in HD, believe it or not. Okay. They have to process after we, end the meeting. Then when that video processes, then we have to upload it to YouTube for it to process more. Okay. If we want it in HD so it's not blurry and grainy, it just takes a little while. If we could have it uploaded and done a minute after the video is done, we would obviously do it that way. Okay. So stay patient. It's always going to get uploaded, and we will at everybody as well in this. So you should have a nice little notification right next to that masterclass tab. And then any trade or any questions you might have, or just the daily chat that goes on, is under stocks chat. That's where you'll find everybody on a daily basis, all in that chat talking about, stocks, right? Okay, cool. Also, friendly reminder, there will be no admin that will ever request you or DM you. Okay, guys, we do this for a reason. We liked it for you to ask all your questions in the stocks chat, because the chances that you have the same question as somebody else is significantly high, right? If you have the question, I guarantee there's one or two other people that probably have the same question or didn't realize they have the same question, and it'll always get answered. A lot of times those questions get carried over and we bring them into the masterclass where we can answer them in a video for you. So we explain even further. But remember this, a closed mouth will never get fed. Okay. A closed mouth will never get fed. You cannot expect to come in here and ask zero questions and think you're going to be successful. Okay. It's okay. There are no dumb questions, right? There are no dumb questions. We're all here to learn, right? Okay. And then we go through position sizing guide where we break down, right? We talk, the first trade should be your smallest. Okay. We go through Monday and Friday. We talk about lightest, right? That's the first day of the week. We're getting back to it after the weekend. We talk about Friday being one and done. Chill out. Most of Wall Street isn't even really in on Fridays, if we're being honest. Tuesday, Wednesday, Thursday is probably where we're going to have the bulk of your fun. Okay. And those will be nice moves. But we're also getting to see how the week started off as well on Monday. Okay. You guys would go I'm not going to read this line for line, but you guys can go in and it's all here for you guys. Okay. And then I think this is the next most important one everyone should go to is just the call out guide. Okay. The actual call out guide. Okay. How call outs work. Okay. There you go. Okay. Here's all of the acronyms that we use. Okay. It's good to know these. Okay. Here's a set of rules, right? Here's how we treat stop losses. Okay. This is extremely important, guys. Go through this. Please go through this. Please go through the call out guide. Okay. Please go through the call out guide. And then we have a risk management video in here. Go ahead.
Yep. Yep. Actually, risk management there. Guys, everything is also self-explanatory within the Discord, right? So you see Wolves University, if you want to go to the left, on the left. So you have it from the beginning, right? You start the top, right? What's going to be the most important? Welcome Wolves, right? So welcoming sector, right? Section of the Discord. Read first, beginner course, right? Manifestations, learn lessons, all that good stuff. Helps you, as a welcome, right? If you're new, it's going to be the section to go to. After that, we have Wolves University. Why is that number 2? Because we take our education very seriously. It is the most important thing. You can join a million Discords. You can follow a million alerts. I want to be the honest guy here and say alerts aren't going to make you rich. They're not going to get you to your goals, right? We use them as education. Yes, you can follow and make money with us. But as a lot of you probably know, you've been jumping from Discord to Discord and you're wondering why. I'm stuck in the same place. You have to learn how to trade first and foremost. That's why we have the education there as the second most important thing. After that, the trading desk. So think of it as you go to your desk in the morning. It's a trading desk. What am I going to find at the desk? Announcements, earnings, economic data, right? These useful tools for us. Below that, then, right, Mag 7 updates. We post those twice a week. Morning watch list is there, right? It's your tools. That's like the tool section. After that, we go to the call out channels, right? So a lot of people are like, where are the call outs? Every single call out, right, is under the call out channels, right? So for those who are like, this dude's an idiot, I'm just here for alerts. I don't care what he's saying. Call out channels. There you go. Swings, small accounts. Self-explanatory. Swings, small accounts. Those are where the swings are. Bot time. Day trades, right? In and out, a day trade. More scalping like that we do with ETFs, SPY, QQQ, IWM. Self-explanatory yet again. And then we have leaps and common trades, right? So long-term commons or leaps trades are posts there, which you can be considered swings as well. And then from there, obviously the den, stocks chat, right? Wins, futures, health chat, right? Kind of more the chats area for you guys. Cool.
Yep. Absolutely.
And then at the very end, we have one more education center. It's going to be another kind of like library education center for you guys. Library, intro options, just some more education for you guys, free education for you guys. So that is the Discord in a nutshell.
There you guys go. There you go. So those of you, and I know there's a lot of you that have been with us for a while, didn't even know that this channel existed all the way up here, which explains exactly how our Discord works and exactly how we work on a day-to-day.
And as always, guys, if you do have questions, please ask them.
Yes.
In the group, right? If you're like, we're here for you guys, right? But this is, go to read first. Call guide should answer most of your questions. You have more questions than that? Always feel free to ask them. We are here.
Yep. Absolutely. Yep. We got Christian here, who's an admin, who's a great admin, and he says he has never been to this channel. So that's how I know. If he hasn't, you guys haven't either. But now you can. Okay. and it will tell you everything you need to know. All righty. Got a housekeeping done. Now we're going to get into what you guys want. We're going to get into our chart patterns. And I'm going to start before I hand it over to Justin. And he's got a very nice slideshow for you guys today that we're going to walk through before we get to questions at the end. Okay. I'm going to go through one thing and one thing only. Okay. I'm going to tell you guys if there is one chart pattern you can watch this entire year and only trade this chart pattern, you are going to have a successful year. Now, does that mean that you might not trade every day? It might. Okay. It might. And this is, I'm more so leaning towards swings and buying time here because for many of you, you guys, I'm hoping this is the year that you stop lying to yourself. Okay. And start making trading boring and just do some swings. Yes. Look, I think a lot of people get caught up in this, like, if you're not trading zero dates and you're not scalping and taking 100% every 3 minutes and like, then you're not really trading. It's like, what? Who told you that? Who told you that? Right? I promise you, guys, if 2026 is the year that you slow things down, okay? I mean, just look at just the swings alone. If we went up and added the percentages of just this year, it is insane. Of just this year. We're 15 days in, not 15 trading days, just 15 days into the year.
They're in the day trade section if you want to, of last week's.
Oh, yes.
Let you want to just look real quick.
Okay. Gotcha.
Kind of scroll up just a little bit.
Yes. Okay. Well, here you go. 40%, 30%. Okay. You guys, I'm not going to say it out loud, but that's 1, 2, 300% bangers. 1, 2, 300% bangers. You guys see, right? Oh, here's more. I think this was the first week of the year. Okay. You guys can see lots and lots of wins.
That's a high percentage, even though time was bought.
Yes. And these are all of the majority of these, I'd say 60 to 80% of these are all with a month to 3 months on the contracts for time. So don't let anybody lie to you guys. You can still buy time and you can still make money. Like, don't forget, day traders, guys, before like options were really popular and a thing, the majority of people trade comments. And to have, imagine trading common shares. Like, imagine you're going to day trade Apple. You're going to day trade the comments. And Apple had a 1% update, 2% update. Okay, well, you got 1 or 2% net return. That's pretty solid, right? That's pretty solid. But you also had common shares, so you weren't battling any theta or time decay. And you just took what the market gave you. Right? You just took what the market gave you. So if you bought some Apple lower and then you held it for a month and now you're up 5 to 10% on the trade, that's great. Okay? That's great. Don't let anybody tell you that is not great. If the S&P returns 8 to 10%, 8 to 12% annually, and you're getting 10+% on any given trade, then you're beating the S&P. Right? Right? I'd say that's pretty good. I'd say that's more than good. Okay. If this is the year that everybody just slows down, okay, finds 1 or 2 chart patterns that they really like and just stick to those, I promise you, you will probably have your best year ever. So what's the chart pattern that I'm personally really only going to be watching for this entire year? And we've already seen it a couple times. Right. And the first one, I think this was the first one of the year. Okay. Was simply this. Structure is created. Right. We break the structure, we back test the structure, and then we move higher. Okay. Right. You have structure created. You break out of the resistance. You back test it. And then you move higher. Okay. I'm going to say it again. Create structure. You find where sellers are. You see where sellers get overtaken. You give buyers an opportunity to defend that overthrow. They do. Then you look to the long side. And this happens on every time frame. So this is a daily where that happened. This happened yesterday on the 5-minute chart on SPY. We had structure created. We broke out of the structure. We back tested it, and then we moved higher. Now this is a 5-minute chart, and it happened again right here, right? You guys can see it. There's your structure. Buyers overtook the sellers. We got our back test and held. That's your cue to get long. So if it happens on a 5-minute, happens on a daily, okay? Here's another one, right? Uh-oh. What just happened? I don't know what just happened here, guys. Oh, there's. Sorry about that. Blow off the top here. Okay. Structure gets created. We break where the sellers were in control. We back tested on that candle, and then we move higher. Oop, 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 oop. I'm going to put this down just a little bit like that. All righty. Does everybody understand this chart pattern? You create balance. You create what's called structure, right? You just see, hey, there's buyers and sellers. There's a nice range here. And structurally, we're seeing higher lows, a bunch of higher lows. We're seeing an uptrend. Okay. So the higher percentage trade here, the more confidence trade here is that buyers are in control up here. So if we take out the highs, they're really, really in control. And now we wait for the back test. Okay. This happened on Meta back here, right? We created some structure. Like this happened a while ago. Okay. We created some structure. Okay. But there were sellers right here, correct? Sellers. There's resistance here. We broke above. We back tested. And then we ripped higher. Okay. This happens on every chart. Now, this might not happen on an every daily chart. You might not get into a brand new trade on a daily time frame every single day, but that's okay. Guys, if this year is the year for you to get something down, is to know to be a day trader does not mean that you need to take a trade every single day. Okay, I'm going to say that again. To be a day trader does not mean that you have to make a trade every single day. All righty. I'm going to say that till I'm blue in the face this year. And I'm also going to bang the table. Okay. I'm going to bang the table here on this chart pattern. Right? Notice. What just happened? What happened? Structure gets created. Buyers overtake the sellers. We get our back test and bounce. All right. Right now, this move hasn't played out, but it could fail. Could this fail? Sure. But we're at least waiting for the same pattern over and over. Google. Y'all remember Google? Great trade here. Okay. Well, this happened a few times. This has happened a few times, actually. But okay. Well, here we go. Structure gets created. We break out. We back test. And then we go higher. All righty. Then we got more structure get created. And it's a little ugly here, right? But it happened. Okay. It's happened. But you can see, where are the sellers in control, right? Would we all agree that the sellers are in control right in this 322 area? Well, we broke out of it. And then we back tested it. That's when we got in. And then we ripped higher. Happened multiple times. Structure, breakout, retest, go. Structure, breakout, retest, go. I'm going to pound the table on this chart pattern until you guys aren't going to want to show up to Masterclass because you're like, what are we going to talk about today? And then you're going to say, I wonder if he's going to talk about that chart pattern that he's been banging the table. I don't want to go because I don't want to hear it, right? And if that's how you react, then that means I'm doing it right. Okay? So, guys, we are going to be looking for this chart pattern over and over this year. Just be ready for it. When we talk about make trading boring again, okay, this is boring. There's nothing fancy. It's not cute. I'm not getting cute. I'm not like, oh, yeah, I'm getting creative. I'm going to, No, I'm going to be disciplined. I'm looking for this one chart pattern over and over, and I'm only going to trade it. That's it. The market rewards discipline. It does not reward creativity. The market rewards discipline. It does not reward creativity. That's like anything you do in life. Anything you do in life, if you're disciplined within that, whatever it is, you will usually get rewarded for that. When you try to get creative and get cute and figure out how you can cut corners and do this and do that, yeah, you might get a little bit of, right? You might get a little bit ahead, but really, if you're cutting corners, it's all gonna crumble from beneath you, right? If you're not disciplined with your risk management and your sizing is all over the place, yeah, you might get a few wins, stacks them up, but then that one trade that you go too heavy on, you're probably gonna lose on, and it's gonna ruin all of the gains that you've gotten, guys. So this year, guys, the market will reward you if you are disciplined. Okay, you do not need to be trading every single day, multiple trades a day to be a day trader. I don't know who needs to hear that, but I think a lot of you do. Okay. And we're going to be looking for this chart pattern. All right. I've now repeated that probably 116 times just tonight. And I probably have 100,000 times more to repeat that for the year. On that note, I'm going to leave it. Justin, how are you doing? Is there anything you want to add to what I've been
No,
yapping about?
I think that is good. I mean, we
Okay.
obviously we're gonna go into more classes throughout the year, supply and
Yes.
demand, structure, and all that.
Yes.
But yeah, that was a good leading intro
Okay.
into, I would consider it a pattern. And then I'll be
I
going
see what you did there.
to,
All right.
I don't know why this went away, but give me one second.
Yep.
And we are back in business. All right, let me share my screen.
Okay. Do I need to stop mine?
No, you're good.
Are you good? Okay.
You
Okie dokie.
will
Okie
Cool.
dokie.
So we're going over like the top patterns that we use, and it might seem rudimentary to you guys, but they work, right? I think they work more than any other thing that you can use, and I love it because it's simple, right? And I think this year I'll add onto my 2 cents is that make trading simple. To stop overcomplicating it, right? Trading is a very simple thing. Again, it's not easy, but it is a very simple concept. It's buyers and sellers.
Mhm.
Make it simple. The more simple you make it, the easier it becomes. I promise you.
Say it again. Say it again. Say it again.
The more simple you make it, the easier it becomes. And it's true. And I think anybody can attest that's in
Amen.
our group.
Amen.
Um, it's true. That is the real thing. So first is the bull and bear flag. Many of you have heard of these. What are they? Well, bull flag pattern is a bullish chart pattern that typically occurs during a strong uptrend. It consists of a sharp price increase, right? The flag pull. Boom is considered the flag pull. Followed by a period of consolidation, the flag, where the price moves sideways or slightly downwards, and the pattern signals a continuation of the uptrend, right? So this is going to be a continuation pattern, right? Both of these are considered a continuation pattern, bull and bear flag. So we have the flag, right? The flag pull. We have the sideways action or somewhat down. That's why it kind of looks like a flag. And then what usually comes down into structure, supply turn into demand, right? And I'll show you guys this here in a second. And then we push higher, right? So that is a bull flag. Recognize this. This is probably one of the most common patterns that you can use. And this goes for the daily chart all the way down to the 5 minute. So I will add, guys, that anything in trading, chart patterns, strategies, anything in trading can be used on any time frame. So people always ask, what time frame do I use it on? Well, you can use it on any time frame you like. But, right, the higher time frames like a daily chart, it's going to hold more weight. It's going to be a bigger move, right? On a smaller time frame like a 5 minute, right, it's going to be a smaller move. Um, let's go in US here, right? Perfect example. We have structure here, right? We have the supply here, big supply. What happened? Bull flag, right into supply in the uptrend, pushing higher, right? So just exactly what we're talking about here. Nice little bull flag, boom. Flagpole, I consider this whole flagpole. Let's go here. You have the flagpole, bull flag, continuation. Flagpole into structure, right? Supply turn demand, move higher, or you can use the 8 EMA as well, right? This is actually a perfect setup here. But that's a bull flag, right? These are very, very common. You can kind of consider this a bull flag here, right? Flag pull, bull flag, push higher, right? You will find them more and more and more again, right? It's a very,
Mm,
very common pattern. Flag
I
pull,
like
bull
that break
flag,
of
push
structure.
higher. Flag
Yep.
pull, bull flag, break higher, right? You see it all over. Let's go see if we can see it one on a 5 minute time frame here. Bull flag, flag pull, flag out, push higher. Kind of, this one's not really one, but I would say this one is bull, flag pull, push higher, right? You'll see it time and time again. It's like literally one of the most common patterns that you can trade. Flag pull, flag out, push higher, right? Pretty much every day you're going to see this pattern, especially if we're in an uptrend, you're going to see the bull flag. It's one of the best patterns you can use to know, right? And to trade off of. I just showed you guys from the lower time frame to the higher time frame, right? So, like on the lower time frame, right, we're using just the intraday action, right, for the move. Higher time frame, obviously, right? You can see the bigger, since it's a larger time frame, you can see how big of a move it creates, right? Lower time frame, we're using intraday. Higher time frame, bigger move. So one concept you guys should understand. Higher time frames, you're using these patterns for the bigger move, aka you can use them for swings, right? If you're seeing a big bull flag on a daily time frame, probably getting a massive move out of that, more than likely, right? Um, Next is the bear flag, right? Same pattern, just flipped, right? So we flag pull, we kind of push higher, and a lot of people can consider a bull or sorry, bear flag. This is somewhere where they'll be looking for a bounce and it just continues lower, right? So this is something you definitely need to recognize because they'll be buying a bear flag uh, pattern when they should be trying to take it to the downside. Bear flag pattern is a bearish continuation pattern that indicates a potential further decline in price after a brief consolidation phase. A bear flag pattern consists of two main components, the flagpole, just like the bull. This is formed by a sharp downward price movement indicating a strong selling pressure. Flag, following the flagpole, the price enters a consolidation phase where it moves sideways or slightly up in a narrow range. So bull flag comes down, right? So there's two things to know. We go up, we come back down, we push higher. Bear flag, we come down, we come up, we push lower. Let's look at SPY today. Let's go to the lower time frames here, right? We can consider, let's go 5 minutes. So here, here's what kind of I was looking at for today, right? Kind of the trade that we took today. We push down, pull. So this is what I was seeing, guys, right? We obviously have a big supply here from high of day. We push down, we flag out, push lower, right? Everyone can see that there. Nice little flag. Let's do that. Let's do that. Right? Flag pull, bear flag, push lower. Flag pull, bear flag, push lower. Right? So this was what I was saying here today, right? Just back into supply, right? We had a very big the action today, right? We're just kind of pushing higher. We failed, we came back, failed, push lower, right? We came back up, failed again, and then drop off, right? So pretty much we're just taking the reject into supply, right? This action is not strong. So for those who are asking, what was I looking for on SPY? Why did I see the downside trade the puts today? Is this a strong uptrend? Is this really a strong uptrend? Are bulls really in control here? No. And then what happened? We failed, right? So I waited all day until we failed. We took the puts, right? Headed lower, right? Missed this. I started driving. I left home, went to the gym. But same thing, right? We came up, failed back into supply, low day or high of day, right? Headed lower, right? This is not a very strong. Now, if we broke out higher over this level at 635, absolutely. We did not, right? So bear flag, push lower, right? Two distinct different things for you guys. Next on the list is going to be morning and evening star, right? This is a very common one as well. The morning star is a bullish candlestick pattern that signals a potential reversal. So these are reversal patterns. Bull and bear flag are continuation. The morning and evening star are going to be reversal, right? Reversal, reversal, right? So these are very big reversal patterns you will see quite often. The morning star is a bullish candlestick pattern that signals a potential reversal from a downward trend to an uptrend, consisting of three distinct candles, right? The first candle is long and bearish. Second candle is small body, could call it a doji. And the third candle is long and green. So we have a big sell, we have a doji, and then we push higher, right? And in the morning star, we want to see this candle really push higher, right? Push higher and then this red candle here. That's going to show us momentum strength. And you can see it here. It's a good representation as well as the evening star, right? We push higher, doji, right? So what is this telling us, right? Let's break this down. What exactly is this candlestick pattern telling us? Sellers were in control, right? Sellers are in control here. And then what happened? It's sold out. Buyers are buying it up, right? Buyers are buying this up. And then they push higher than the previous sell, right? Showing that the buyers regain control of structure. And I'm going to show you this here right now. Even on its bear flag, look what happened here. Evening star. Interesting, right? Even on today's action, right? So these patterns are very common, guys, right? We're not just making up these patterns because we want to make them up. These are very, very strong patterns that you guys need to start recognizing, right? 695. Let's go back here, right? Posted this for you guys on Sunday, this level on Sunday. Here you go. 695, 695, right? What happened? We came up, we rejected it. All right, let's go down to the lower time frame. A 5 minute again. Right? So we know 695 is a very prominent level. What happened? We had an evening star right into 695, right? So another reason why I'm looking short here today. You can kind of even see one here as well. Push higher, stalled out doji, candle down, evening star, evening star. So just like the bull and bear flag, these happen quite often. Let me go back here. I'm going to show you on today a morning star. All right, just talk about the morning star, and then the evening star obviously is the opposite, guys, right? Long, long green candle, doji, come down, right? Big red candle. So let's look here on today's action. Candle, selling pressure, doji, push higher, right? So even just in today's intraday action, we have a morning and evening star, right? Very, very common patterns to recognize.
You already said the one at the highs, right?
Yes, yes, yeah, right
Okay,
here.
yeah, all
Yeah,
right,
yeah.
sorry. I must have missed that. Sorry. Yes. Okay.
Yes, we got evening star and morning star. So think of it as, right, evening star, up, lights out, sell, right? Kind of think about it like that. That's why it's called I don't know. It's why it's called evening star. I like to call it an evening star because of that. Lights
I
out,
never thought about
right?
it like that. I
Good
like
night,
lights out
right?
though. Yeah, time to go to bed. Wrap it up.
Time to go to bed. Yeah, bulls, let's go to sleep, right? Guess why I eat. I don't know. That's why it's called that, but that's, evening star. Think about it like that. Morning star. Sellers are in control. Time to wake up. Morning. Boom. Sell. Doji. Push higher. So does everybody understand that? There's two very important patterns, morning and evening star. And I believe like on TrendSpider and Webull, you can handle patterns.
You can
Let's
do it
go
on
here.
Thinkorswim
Yeah,
as
I
well.
think
Yep.
a lot of these have like morning star. Let's see if it doesn't recognize it there. But so a lot of these will have we'll show you, right? The patterns as well. Boom. Showing you on the daily here, right? They will find those patterns for you. They might not show you all of them, but they will show you them, and then you can start practicing like that. I know Webull is really good at it. TrendSpider is okay at finding patterns. It's not the best. And then the last but not least, the bullish and bearish engulfing. Pretty simple. Bullish engulfing, especially on a daily, right? We have a red candle. It engulfs it. Open, close, engulfs the red candle below. Bearish engulfing, right? Open, close, engulfs it. So let's go to the daily here on SPY. Um, here's a good, let's take these off. Here's a good one. It's not super, super clean, but pretty clean. It doesn't have to engulf the wicks. Technically it does, but we could see here, this is a pretty big engulfing of the previous day, right? We have the open, sorry, the open, the close, open, close engulfs really that green candle. What happened? We head lower, right? Nice little bearish engulfing, push lower. That's typically what should happen. Um, but but I will say it seems like in the past year it's been the opposite. So take these off, make it a little bit simple for you guys. Look at this daily. Bearish engulfing, push higher. Right? It seems like for this past year, and I think we have another one. This is pretty much like a bearish engulfing, pushed higher. Um, Another bearish engulfing, we push lower, right? So, I would say this one has kind of been 50-50 for the past year, in my personal opinion, but it is a very common one, and it should do how it should play out, right? We have a bearish engulfing, we should head lower, which I mean we technically did here, head lower. We held, obviously we came into a big demand here, so we pushed higher. But that is bearish engulfing and a bullish engulfing. Norris, do you have anything to add to that?
No, no, I think that was very, very well said and straightforward. And I think adding those indicators to your brokers or trading view or whatever, or if you have TrendSpider, and maybe only looking for just a couple of them, because if you do all of them, like you're gonna have stuff all over your chart. But just doing a few and then just letting it show you, hey, when do they think that this is happening? And you kind of can just go back and review. Right? I don't think that's a bad idea at all. I actually really like that idea. But of these chart patterns and of these candlestick patterns, um, you know, you ideally you can trade all of them, but maybe stick to one or two that you kind of lean or gravitate towards, and just only look for those guys. Right? I wouldn't try to do too much at the beginning, right? And just look for those one or two that you like, or that you've realized, oh, I've seen this pattern before. It's something I've noticed. It's something it catches my eye right when I look at a chart. I'm going to stick with this. Okay. And then just continues to go back and back check or back test and just see the previous action, guys. I think it'll help start to recognize a lot of these chart patterns. But no, man, that was very well said. And I'm glad we got to get more in depth on these for sure.
So write these down: bull, bear flag, morning, evening star, and bullish and bearish engulfing. I'm going to give you actually homework early for next week. This will be due next Sunday in the homework channel. Don't have to give me an explanation or anything. I'll put in announcements as well. But just give me like a thumbs up of I went and researched these. Okay. Just go and research these on your own. Bull, bear flag, morning, evening star, bullish and bearish engulfing. Um, just go do it, right? It's going to help you. And like you said, I'm not looking every day for these. Really, if you just pay attention to bull and bear flags, you can literally make a living trading just these two. I promise you. I swear. Bull and bear flag can literally make a living just trading these. So I think we'll leave it up to questions now.
Ooh, sorry, I was muted. Yes,
Oh, you're good.
guys, if you have any questions, drop them in the chat in the Zoom here. Drop them in the chat. We're going to try to get to all your guys's. Yes. Okay. Okay. So, would you consider Google a good break and retest? Well, you're asking. That means you're seeing it, right?
Sorry.
What do you think? What do you think I'm going to say? And I'm not trying to be, a dick or anything like that. I'm being honest, because a lot of you guys, I think you guys see something, but you're like, oh, I need somebody to validate this for me, pretty much. Yeah, which is fair. But a lot of times, guys, trading is just trusting what you're seeing. And it's like it's okay if you're wrong. It's like that's the other thing, guys. You're gonna be wrong in trading, guys. There's no one that bats 1,000% in literally anything in life. There's no one, like, everybody, any sport out there, no one's bad. No one has never lost. No one has never not missed a shot. Like, you're gonna lose. That's okay. Guys, there's this chart pattern that happens and it does not work out. And do we lose? Yes, it happens. Okay. But on this Google trade, yes, if you drew a line at those all-time highs, right back at three. Yeah. Okay. This chart is pretty, bro. Wow.
Thank you.
Okay. So what do we have there? We have structure. Did we just break out of that structure at 330? And now are we back testing it? Yep. Because if we were gonna reject that level, guys, it you would know we rejected. Like it would pop above and it would instantly fall back under 330, right? And it would sell. You would see, right? Um, like you would see, right, that we failed. No, we broke out above, and now what are we doing now? What would you guys? This is one of the. What would you guys say is happening up there above where previous resistance was? What would you argue is happening up there? We okay, perfect. Yeah, Desmond's right. Flag. So now you have a break, and typically, guys, that retest that happens that I talk about, it happens in a flag manner, and that's when you know this the pattern is setting up really nicely. Is it flags out? It might not retest in the next day and then instantly take off. It might take a couple days. Let it flag. Let the buyers consolidate above there. All those sellers are trapped, right, and likely off sides, so they need to exit. Okay, and that's just going to fuel us staying up there, and then they move higher, right? Then I move higher. So, yes, Desmond, I think you asked that first, right, Desmond? Yes. You are absolutely, would you consider a good break and retest? Yes. Now, am I in from lower and I'm not? Yes, absolutely. We're in from lower, so that's good. But yes, is this a flag out happening? Absolutely. Absolutely. Great question. Craig says, can you go back to the sell on EOS? Is there a way of knowing that was going to sell and not be a bull flag? I don't even have to look at the chart, but I will tell you this. Is As traders, guys, this is the other thing too. We do not get paid to predict. Okay? We get paid to react. Right? And so, is there you just asked, I don't even have to see the chart. You just say, is there a way to know that there was going to be a sell and not a bull? No, there is no action. I know, guys, if we had the crystal ball ahead of time, like wouldn't we be using it, right? And I'm not trying to be a dick. I'm just being very realistic here. Um, but like, no, we don't know. We don't know for certain, and there's nothing certain. The only thing that's certain in the market is full of uncertainties. That's it. Okay. So no, we don't. But what good risk management would keep you from if that bull flag you were playing, it didn't end up working out, right? But good risk management would save you, right? You're wrong on the trade, but if you have good risk management, then it's not really going to hurt you, right? You're going to be wrong. That's going to happen, right?
Yeah, I will say, adding on to, this is sell today. Right, I was looking for a sell. I was not looking. I mean, you guys can see it. Literally just played my level to level.
Oh,
Didn't draw this today. It's gonna say that right now to my own horn. But
what the hell just happened? Oh, sorry.
oh
I
wait,
think I think he was talking about
yeah.
EOS,
Oh,
EOSE.
okay.
Sorry,
Yeah.
he said something. Is there a way to know? Oh, damn it, where'd it go? Is there a way to know that bull flag was not going to break? Wait. It was going to sell and not be a bull flag. Okay. Here's the thing. This could still be a bull flag, right?
Are you
Am I
talking about this
assuming?
bull flag or
Which are you
this
talking
one?
about up here?
Which one are you talking about? This one? How do I know that this is gonna go up versus down?
Wait, hold on. Wait, who asked that? Sorry, Craig or Craiger? Is that Craiger? Might be. Okay. It was earlier. I don't see it right now. Okay. I don't know. Okay, maybe we'll postmark that question then for Craig Kerr. Um, hold on. Why am I getting so lost on these questions? Okay, wait. Let me see. Okay, risky. Um, okay, with these chart patterns, is there a typical entry point you like within them, or is it more an indicator of direction? Well, yeah, I mean, okay, let me see if I'm saying, is there a typical entry point? Yeah, I mean, on this pattern, oh,
Yeah, I mean, we're looking for the break, right? We're looking for that
yeah,
break. So just like on EOS, right? Bull flag, we're looking for the break, right? Can either play the break of the high, definitely
Oh, there
gives
we
you
go.
that better move.
Mm,
Or like on iron, right? We have a flag, right? We can
mm,
play the break of the trend, right? So the bull flag is going to have a trend, right, at the top. We can play the break and retest of that trend, right?
yeah.
Does that make sense? We have the flag out. We have a trend coming down. We play the break of this trend right here. Boom. And then we can go back to EOS here, right? We have this trend coming down on the flag. You play the break of it, right? Here's that break. I think a lot of it is you guys are like literally over analyzing and overthinking everything. Like you're
Mm,
this is the thing. And I think this is what it is. And you guys correct me if I'm wrong, but I think especially from my own experience is you guys are thriving off the fear. The fear of this not working out is overpowering you guys. Instead
mm,
of you guys trusting the bull flag, right? I mean, especially like on EOS, literally cleanest. We have structure here. We broke structure, bull flag into it. Instead of you guys sitting there and like this, what if it sells, right? That's the how do you know? How do you know it's going to go? You don't know. But I know there's a 100% higher probability that this is going to go up versus come back down. We've already built out, like, look at this. We've already built out this range here, right? They've already built out buyers, 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 buyers. We push lower. We already know there's all of these buyers here. Did we push lower? Yeah, a little liquidity grab lower.
instantly reclaimed it.
And then yeah, exactly. Instantly reclaimed. And then we had a flag out. That's momentum. That's bulls are in control. So I think one of the things, going back to what No Risk said earlier, is you guys, you're not, you see it and you're not trusting yourselves. One
Yeah.
thing about me is like today on SPY, I averaged down. I trusted
Mm,
myself. I trust what I see. I don't sit there and second guess it. And I'm like, no, I saw what I saw, right? So for this example for today, this action very sloppy, right? And we, dude, this is not. If he broke out of the 695, yeah, and went higher, absolutely strong breakout. But until then, this is not very strong. Not as strong. This is very not strong at all. Sellers, 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 right? Like it's like literally there's not much strength there, right? It's literally sellers are in control. And then what happened was we pushed lower, right? I didn't buy this top, didn't need to, but I waited until we broke some levels, right? So you guys can see here, right? You can see here around 695 kind of exactly. And then we can kind of see here around a little bit lower, right? We have selling, selling, selling. So we know if we break below really this level here, around let's call it 695. Who has been in control the entire day below 695? Pretty sellers have been 100% in control. So I'm going to trust that once we break back below, do you think buyers are just going to be like, if sellers are controlled the entire morning below 695, and we couldn't even break a dollar above 695. We broke what, 30, 50 cents above 695, and then we immediately broke back below this 695 level, right? I'm going to trust that the sellers are going to remain in control, right? So trust yourself. I think you guys are like, how do you know? How do you know? How do you know? Well, I don't know, but what I do know is what I do is this. Sellers have been in control the entire morning below 695. I know on a daily chart, sellers have been in control below 695. Sellers can't break above 695. Yeah, we broke above 695. We closed below. Closed below. No buyers have been able to regain the 695. Sellers, 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 sellers. Today, coming into today, has all been sellers below 695. Sellers are in control. So then I go down to the smaller time frame, right? And you can see it here. Sellers are in control. Sellers in control, all below 695. You would think if buyers were going to regain control here, you're going to see a very big pop, especially if so many sellers are in control. There wasn't, right? And then immediately as we popped, boom, we head lower. And if we know that sellers are in control below this level and we break back below, break, retest, my bet and my gut instinct from what I'm seeing, the highest probability, if I know sellers are in control, is that they will have continued control. Does that make sense to everybody? I think you guys are like overthinking, overanalyzing. You're this is the thing, and I've been there. You are more scared to lose money than you are to believe in yourself, to believe in what you're saying,
Mm, mm,
right?
mm,
You
mm,
are
mm.
literally you're letting the fear overtake you instead of you see it, right? Ask yourselves this. If how many trades have you not taken that you were right? Ask
Ooh.
yourselves that. I guarantee that if you looked back because you second guessed yourself, you overanalyzed, you got too fearful, I guarantee that if you took every trade that you believed was going to happen and then you got scared and didn't take it, more of those trades played out exactly how you saw it was going to play out versus not. I could be wrong, but I guarantee I'm not. Right?
Yep.
So believe in
Agreed.
yourself. You're 100% over. It's not, I don't know what's going to happen. But you guys can see how I'm using the chart. I'm just using the information given to me. This is my information here, right? This is the information. It's giving you that information. It's telling you, right? This is the data. Think about it. This is data to you. Okay. Well, if I know that sellers have literally been in control below 695, we can't break above 695. Well, I come into today. Um, let's go back 5 because we've been using that. Really, I posted this on Sunday, the 695.31 level. It's called 695. We really need to reclaim that. That was your break level. Did we do that today? No. Right? So it's not magic. I didn't know, but what I do know from the data is that below this level, sellers are in control. So as long as we stay below that level, I'm getting short, right? See how it's very simple. I'm breaking it down very simple. Not easy, not easy, but I'm breaking it down simple. Well, who's in control? Well, I know sellers are in control below this level. Well, today, morning action, nothing but sellers were in control. We could not pop above it. And then we barely popped above it, what, 7:30, so about 2.5 hours after market open. That's not a very strong case for bulls there. And then we immediately push back down below that 695.31 level. It's called 695, bear flag. Cool. Right? And then we come back up, we reject again, right? I know. So yeah, I was repeating myself at this point, but you guys see, it's like I'm not overcomplicating it. I'm just trusting from the data that's given to me. I'm just using that to make the trade, and I'm trusting that data to make the trade. Why? Because you have to trust this. This is what we're using, So
Yep.
sorry,
No,
that was a long rant, but
no, that was good. That was good. That was good. Chet, I know you said you were watching Netflix at 85, 86, which makes sense. So I'm just curious why you took it a bit higher. Well, here's the thing. I would like to buy it down there, but we are basing out above that, right? We are basing out above that area, right? So, am I concerned with 3 points of drawdown if my target is significantly higher? Not really. We have January 2027 calls. That means we have a year, right? I'm not really concerned. I'm not going to go back and be like, oh man, remember when we were buying, remember we were worried about 85 or 88, but it's now trading at 120. I mean, I'm not really going to care, right? But also, that's why you give yourself room to add into it. Because here's the other thing. Sure, can it go lower? But it also could not, right? It also could not. So if it took off from here, right? I want to have a little bit of skin in the game. If it goes a little bit lower, then I can add, right? I'm not concerned with calling the absolute bottom or the absolute top. That's a fool's errand, right? And more often than not, you're just going to end up talking yourself out of the trade. Oh, it's going to go lower. It's going to go lower. I think it's going to go lower. I can't get in yet. Can't get in yet. No, 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 no. It's going to go lower. Well, what happens when it doesn't? Then you end up chasing the highs, right? And then you chase the highs, and then all of a sudden, you chase the highs. It has a pullback day. Now you're red. You're pissed that you chased the highs. and then you panic sell because you're instantly red on it, right? You see like the psychological thing that starts to happen there over and over. I'm not interested in bottom tipping or calling the exact low. I could give a shit, if I'm being honest. I don't care. Even with March calls, 2 months. I'm worried about 2 months of time because we have, a drawdown day that we're down $1. Guys, we're down $1. We're down $1. Let's not forget that. $1 is down. Okay. Do not forget that. Anyway, hope they answer your question. I'm not interested in bottom tipping in the lows or selling the exact highs. I'm not interested in that. You can be if that's your promote, but more often than not, you're going to end up talking yourself out of a trade or getting frozen because you're like, oh no, but it can go lower, but it can go lower, and it doesn't, and then you end up chasing the high, and that ends up hurting you even more.
For
Uh,
example, I'm going to say,
yes,
for example,
yes.
personally, that's what made me miss INTC. I wanted it lower. I wanted this thing to
Mm,
come down into the 30s, kind of more retest here.
yeah.
Completely missed it.
Yep.
So this is one good example, just a personal example of missing INTC because I wanted it lower. When I could have just bought into this 35 level, right? 35, 36 level. And if it came down to 30, cool. I could have averaged down, could have bought like a leap on it, right? Especially INTC is
Hmm.
cheap. But no, I got greedy and I wanted lower. And stuff like this happens. So
Yep. Yep. It's okay to nibble a little bit, guys, and have some exposure, right?
starters, right? Take a
And some
starter.
start, yeah, yeah, and yeah. Don't you got to leave some? You got to leave some ammo in the clip, right? Don't. Well, yeah, maybe I shouldn't say this anymore, but don't blow your load, so, for lack of better words. Leave something in the clip, right? Have another at bat, right? If make sure you get up to the plate again, right? Okay. For day trading, what time frame? Wait. For day trading, what time frame would you be on to identify patterns? Well, day trading, a lot of times you identified a larger pattern or a larger bias on a higher time frame, and then you go down to I mean, some people are on a 1 minute, some people are on a 3 minute, some people are on a 5 minute, some people are on a 15. It's personal preference from there. I would say most of us admins, I think the majority of us, after just having talks with people, it's either the 5, 10, or 15 minute chart. I would say, okay, is
Yep.
where you want to look to execute those trades. Okay.
Yeah, so
Oh,
today, not necessarily a pattern. Or I guess we can go to EOS, something like this. Go EOS. Or no, push the spike. Right. So today, right, I use this is another same example. I know below 695.31. It's called 695. We say below that, I am getting short. I'm getting short below that level. Identify this on the daily chart. And then we were on the 5 minute chart today, right? And what happened? Right? I didn't catch this, right? Because this kind of was breaking out. I didn't catch this because it could have held this demand here and then pushed higher. I waited for that bear flag, right? It was a little early on it, a little early on it, but I waited for that break here, right below this, right below the sell, 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 right? And then you had a flip here around 694.87 to push higher, but I waited for that to break, right? So what happened? I identified on the daily and then identified the bear flag on the 5 minute, and that's why I averaged down into this one for that sell. Right? Does that make sense? I identified the levels and what to do on the daily, right below 695, and then I used the 5 minute and identified this bear flag. Right? That makes sense? So higher time frame shows you the levels, shows you really what's going on, who's in control, and then from that lower time frame, right, that's where you can start to use these patterns. And then, for example, right, SPY, we're day trading, we're not really swinging, but like say, for example, again, like EOS. Well, you identify this, right? We came right back into 14, 1350, right? Identified this flag, you use it for a longer dated swing, right? So we're not you go down to lower time frames, you can see that we're holding here, right? You see we're building up higher highs, higher lows, higher highs, higher lows, right? And then you can buy obviously the break, but we're using the higher time frame, right? So we know, okay, let's use this. The trend here, say 1420, see if we can break that 14. Let me go down to the ninth. right here. We're on the ninth, right? We're holding that 14, 14.25, and you can make an entry there, right? And if you need to average down, you can. But right, we're making that entry there on that break. We know that 14.17 was that entry. Boom. Entry, right? There you go.
Yeah. I think that you answer Rob's question here. Rob says, so we're not trying to predict the break. We're waiting for the move to happen. On a swing trade, should we wait for it to close above the bull flag pattern or do intraday? So both would technically work. You can wait for a bull flag break and look for continuation, or you could take this. Hey, there's a bull flag. I want to see if we backtest 14 and hold on a intraday chart and hold, then I want to look to buy where the buyers are going to be stepping in. Now, granted, are we buying before the breakout? Yes, but we're not sitting here. We're doing here is saying, look, this should be where the buyers come in and defend. I'm buying where the buyers are. That's all. But could you
Yeah, so you
also take it on a break above the flag? Absolutely. There's 1,000 ways to skin a cat here. Okay, but what I normally do on this type of pattern is 13.78. All right, 13.78 to about 14. I'd be like, hey, if we break above that, I'm looking at a back test. I'm looking at a back test.
so yeah, it goes back to trusting the pattern that you're seeing,
Yep.
right? Going
Yep.
back to trusting.
Someone asked, how do you scan for these trades? We, for the most part, I think Justin has a scanner video, but for the most part, guys, we trade really the same stuff. SPY QQ, QIWM. We look at the Mag 7s every single day, and then you can kind of see, tickers that have relative strength that get chatted about. You kind of just go and look at them, right? You go and look at them. And maybe you kind of try to find where the sector rotation is, right? And then you look at names that are strong or just have a good chart pattern, right? I mean, this
Yeah.
is our
Yeah,
KLV is
I'm
just
trying to
textbook.
create
Oh, good.
some more channels for you guys, like all the watch lists and stuff. Um,
Oh,
but
ASTS. All right, guys, hold on. Did Justin just find what are we on here? The daily? Did
yeah,
Justin just find our next break it break and retest pattern potentially?
as
Right? Are we seeing it here? Go to flag after flag. Go to the daily though. All right. So previous resistance up at call it 100. Let's call it 100. All right. We are breaking out. Now we wait and we wait. And once we get a back test into 100 and the buyers step in, then we will look to take this higher. All righty. Justin, thank you. You
yes.
did my homework for me tonight. Thank you for that. Yes. So, does everybody see that on this chart here, guys? Right? We have double top resistance at 100. That's where sellers are in control. We have just broken above that. Now we're going to wait for the retest.
You guys were with us last year. We were all buying in
Oh,
here.
EP.
So
Oh, EP's
yeah,
all over this name. That doesn't surprise me
yeah, we were all
at
buying in
all.
here in these in the
Yes.
20 area.
Yes.
If you've been with us,
If you're a
um,
OG.
but yeah,
Okay. What is considered a full position versus a nibble, especially when you're looking to trade other tickers? Well, depends what type of account you have. It depends what your risk tolerance is,
hmm
right? And a full position should be, in my opinion, 100% risk tolerance. It should be you're okay with losing 100% of that position. That doesn't mean you have to let it go to zero, but you're okay with it. Because what does that do? It disconnects you from the money. You now know, okay, look, I'm okay with buying one contract at $1 to see if I'm right. If I lose, it's $100. Cool. Is that position going to take you out the next day and keep you from having another at bat? If it is, then that's too much size. Okay. So somebody could have a $10,000 account and they're like, I'm cool with having a $5,000. I'm cool with having a $5,000 position. Somebody could have a $10,000 account and they're like, I won't put more than $500 on a trade. Someone might not put 100. It's all relative to you. What is your risk tolerance? There's some master classes from late last year where we go over risk tolerance, and everybody, there's a set of questions you have to ask yourself, and it'll help you figure out what your risk tolerance. What you know what your risk tolerance is, and let's say it's $1,000 and all the contracts are $2. So that means you're willing to risk $1,000, and they're all $2. So you could buy up to 5 contracts. Okay. Well, you could buy three, you could buy and then buy two, you could buy all five, you could buy one and then buy four lower. Right? You just have to get up. So when you take a nibble, right, you basically buy 25% of your risk tolerance and maybe 50% of your risk tolerance. Right? Just dip your toe in the water. Make sure you want to jump in, right? You don't need to blow your load early, especially on trades like this that take some time to develop, where you're probably going to be buying some time on a trade like this. Like for me, this back test into 100, I'm going to be looking at March calls, June calls. Absolutely. Right. So hopefully that answered your question. I think that was from a Zoom user. Do you guys include after hours and charting patterns? I do, but it's completely up to you. I think it's good, especially when you're on smaller time frames, to just see what the overnight action is. I do, but some people don't like it, and that's okay. Right? T says, "Thank you, Mr. Banks, and no risk. Great masterclass as usual. Thank you, T. Appreciate you. Appreciate the words."
Yeah, I definitely yeah, after hours I always have after hours on. Yep.
Yeah, I do. I
I
keep
like
them
to
on.
see what
Yeah,
yeah.
I keep them on. Sometimes I like you can take them off and you can start to see where some of the gaps are from the overnight session, but ideally I like to keep my overnight because it gives you that pre-market low, pre-market high, which is super crucial, especially when you're trading ETFs.
Yep.
Absolutely. Yep. Okay. Did we get them all? I think we're hold on. London's. Oh, Barbara. Barbara. Thank you. That was a great masterclass. Barbara, you are welcome. Thank you for always for always coming out and being a wolf. We appreciate you, Barbara. London, thank you. You guys make it simple. BR, would you be able to do a quick meta analysis? I
Yes.
could.
Let's see here. Let's see. Let's go.
Mm-hmm.
Every week. Drop it every Wednesday for you guys. Mag 7. Every Wednesday. There's your analysis right there.
Yep. It's in there.
Boom.
It's in there. But yeah, we're gonna need to get back above like 635.
Yeah, right. So
640.
today,
Yeah. If you want to be bullish. Yes. You want to get back
yeah,
above there.
watching for 614, 610 to hold for 8 mounts.
Ink.
614, right? Today's action. Looking for
Yes.
614, 610 to hold. 614 held. Boom, bada bing, bada boom.
Ink. Bada bing, bada bing, bada boom. Okay.
But yeah, pretty much. I
Oh,
mean, honestly, we really need to get above 625, ideally. Um, sorry, wow, I don't know where I saw 625. Holy crap. 643. Where did I get 625? 643. We need to get above there. I don't know how I read that 625. 643. Really need to get above there. If we get above 643 here, I think we can see a potential squeeze higher. Potential. Um, but yeah, we are. Let's take off. I think you said there was a gap. Yeah, there was a gap there. Yep, we filled the gap. You were correct. So yeah, we did fill that gap. And we are holding. So yeah, so
yep.
likewise, if we can hold here, absolutely, we can still hold here. Let's see what.
Yep. Um,
Mine's all right.
emit. Oh, sorry. Sorry.
But yeah, we got to hold. I mean, yeah, I would say if we can break above the high of the day of today, like six, I guess that's where I got it, 625. 625. Is this where I got it from?
I think we can
Where did I
likely
see
get it.
625?
We
Yeah.
can get a move back
Okay.
to
I knew
the
it. Okay.
ADMA. Yeah.
Yeah. Move back into AEMA at least, right? So that'd be 628, I think. And on the daily, where's AEMA? About 635. Yeah, that's if we hold down here, then yeah, that's definitely gonna be my target. Is that 625? Or wow, 635. I'm in love with 625 right
Yeah.
now.
Yep.
635. But yeah,
635.
AEMA would be my target to hit.
Yep. There you go. Just like futures and indexes where gaps do get filled most of the time, does that apply to individual stocks too? Example for Google, I see there's a clear gap between stocks 1027 not filled yet. That one gap created to 303.90 403. I think that must be 303.96, whatever. And got filled on 1220. Not a fair value gap question. Well, you kind of answer your question there. Yes, typically all gaps get filled. Doesn't mean they need to get filled as soon as they're created, though.
No.
But typically, yes. Do they get filled? Yes. Does it happen the next day? Sometimes. Sometimes not. Right? Sometimes not. Is it true the intraday value gap usually gets filled? Yeah, okay. You just asked the question. What's the difference between a gap and a fair value gap? So a gap is from the overnight session, from the close of the previous day to the open of the current day. A fair value gap is just price
I'll
action
show you.
traded. Yeah. Okay.
I'll show you. Let me show
Just will show
you.
you. But
So call a gap,
yeah.
and call a fair value gap an imbalance because fair value gap is some
Imbalance.
ICT BS. A little marketing stupid name. Personally, I hate that name. It's an imbalance, right? It's what everybody called it before the whole stupid ICT thing. Fair value gap, it's called an imbalance. Why is it? Because there's an imbalance between buyers and sellers. Fair value gap confuses a lot of people. I would stop calling it that. Let me try to find one for you real quick. Because Spy usually always gives us every single thing. So now 5 minute here. See if I can find a good one.
At the low there is a fair value gap. It didn't get filled technically, but
No,
for
right
the
here.
yep.
Yeah, so it's gonna be three candles. And the sorry, three candles. So it'd be like the close. Um, and then from the close of the first candle and the open of the third, there's a second candle here where there's an imbalance. These do not touch. So you guys see how there was an imbalance here. Boom. Right? There's an imbalance here. Right? So the close of the first, we have our second candle, right? It pushes in the same direction. And then we have a third candle that opens up above. It could open up technically like in the middle of this candle. Um, but right, it opens up above, right? It creates an imbalance, right? There was nothing, sorry, there was nothing filled here, right? So there's an imbalance here that typically likes to get filled. Typically likes to get filled. Doesn't always have to, but that is something to watch for. And I know I can find one here. And just give me a second. Kind of like this, but I mean, it wasn't really the best. All right, we kind of have slight imbalance here. Boom. Right, filled that imbalance. Bounce. Obviously, we had it lower. You guys see how there's an imbalance? Close, or sorry, close, open, imbalance in between. Where do we bounce? Boom. Right at that imbalance, filled, bounced, right? So that's the difference, right? It's not technically a gap, it's an imbalance. So I don't even know why he called it a fair value gap, but it's an imbalance, right? Between the buyers and sellers, right? It means, right, if there's an imbalance, right, you can kind of see everything gets balanced out, right? There's always like a retest, there's always like this balance between, buyers and sellers throughout the entire day, right?
Mm-hmm.
When we see this, we see a candle, we close. The next candle is in the move in the same direction. And then the third candle opens up in between the first and the second, where there's a imbalance here, right? That's the difference, right? So it's not a gap. It does get very confusing. People would think, well, what's the difference between a gap and a fair value gap, right? This is the difference. It's just an imbalance. It's kind of the same, but you have three candles, right? There's no actual gap. It's just three candles. Um, have the first candle
Yep.
close. You have the second creates the imbalance, and then the third opens up um, in between the close and the second candle, right? And creates that imbalance. I hope that makes sense.
Cool. Okay, that's the gap question. Hold on.
Or here's a good one. Here's actually a really good one right here. Right? Open, boom, little imbalance. Look at where we do, right? Look at
Nice.
this imbalance. Boom, we hold, push higher.
Nice.
Right?
Happened
So
again earlier before that too, a little bit. It
yeah,
didn't
a
quite
little
get
bit.
into the fair, but you
No,
pulled
but yeah,
back into
yeah.
it and
Yep.
you looked at be like, hey, buyers step in here. This is good. Let's
Yeah.
probably continue higher. Yeah. What do you think about QCOM? What do you think about QCOM? No. Uh just kidding. What do I think about it? Ooh, it's not looking great, but oh boy, yeah, it's really not looking good at all here. Yeah.
It needs to hold here. If it does, I would say if we hold, I mean, this is cool. I would say we can get down into about 155, 150 here. Could take a stab. I'll have to look into the news on it. I don't really know what's going on with it
Is
news-wise.
there a reason why it's selling like that? It's
Yeah,
like,
exactly.
yeah, it's that's the question.
Yeah, that's something I would, when we have a weekly candle
A whole
down
like that's a big
like
body down.
this.
Yeah, 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 yeah.
Yeah, I mean, yeah, we kept rejecting here, obviously. Um, but yeah, I
Pretty
would
bullish over
say,
180. Yeah.
yeah.
Hmm.
But I'd say if we get down into here, right, you guys can kind of see that we got a balance, pushed higher, retest, pushed higher, bounce, 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 push lower, reclaim, kind of, failed here, reclaim, structure here, pushed higher, bounce here, higher. So I'd say we can stay above as 155, 150 here. Could take a stab. And I promise you, long as you guys stick with trading, chart till your heart drops. Um, you'll get this fast. I promise.
Yep.
But the way to get better at charting, guys, is you have to do it, right? Don't just sit there and like obviously we give you charts, we give you trade plans, but go and chart. Like I promise you. Um, yeah, just go chart. That's what I was in it there. Just go chart.
Um, somebody says, if you have enough time, can y'all take a look at ET? This will be the last ticker, guys, before this just turns into a straight charting.
Yeah, we're not gonna do a
We need to
charting
get this
class.
uploaded and we need to get this out to the
Looks
people that
good.
could not. ET though, that looking pretty solid to me. I'm not gonna lie.
It looks so good.
Definitely buyers are in control, uptrend. Yeah, we've had a couple liquidity grabs to the bottom side, but it looks pretty solid. That looks like a nice break there. You're finally getting above. What do you have for your with those indicators that are on there? Or the EMA is what are
821.
8 and 21,
I don't know why I just
38,
only
8,
have the
34.
821. Yeah, I said 21.
Yeah, so you're
Here's a
getting above the 8.
13. Yep.
Yeah,
There you go.
pretty solid.
Looks good.
Looking pretty good to me.
You know what's
Yep.
funny? This ET specifically, my father-in-law, he like thanks me every day because I
Mm,
got to him around here around $10 mark, and he says it's like one of his best dividend and like best performing stocks that
nice.
he has. I got him into ET and EOS, and EOS printing too,
Yeah.
but
Okay,
yeah,
this
sorry,
is a
ET is
good
like one of
this
the
is a good question. We could probably end on this one because I think this is going to be really good. For the retest at major levels, would you guys consider volume as confluence? Normally, lower volume would mean a bounce, but I'm not sure if it's a major factor. A low volume pullback typically means that sellers aren't in control, but there's just a little profit taking or a pullback. So low, yes, low volume, absolutely. Seeing a low volume pullback into a major level typically will add confluence. Absolutely. Okay.
yeah, like
Fair.
this one for example. Obviously, it was a big pullback, but oh, we can see here for example, low volume pullback.
Yeah, we
Mm,
moved lower on decreasing volume, just like we did it on that one. We did it on
and
this
it's
other
like,
one as well.
yeah, I mean, it's a big sell. Don't get me wrong. It's a pretty nasty sell, but we did just come back into, right, this 61 level here, and it was on a low volume. So even though it was a
Oh,
big sell, it just, yeah.
interesting. Would you say there was structure made below 60, then it broke out of 60 and then back tested it?
Yep.
Interesting.
Yep.
There it is again. I'm
Then
till
you have
I'm
some,
blue in the face, guys.
and
I
then
am
you
going
have
to
some,
pound the table.
you have some structure here. It
Structure
broke
here
below,
again.
breakout,
Break out. Boom. There it is
retest.
again.
Wait. Hold on. One more.
No way. It didn't do it again.
Oh!
Oh, man. Damn it.
Wait. Let's do one more.
Oh.
Oh!
Oh.
All right, we're done.
Okay, we're done. Um,
We
okay.
got
No,
it.
good question though. That was a good question for Justin. I had to just have some fun. Great question.
No, but it's true. I mean, we're like this because this is this is what we're seeing. All this like this is what we're teaching you is what we're seeing, right?
Yeah.
And again, you guys, it does take time. It takes years.
More and more screen
Not
time will
not
get
gonna
you.
sugarcoat it.
Yep.
Yes.
Yep. Screen time will just get you to identify. You'll instantly look at a chart and it's like screaming at you. It's like the only thing you see. And that's all you like that like it like I said, screen time. It'll every that little light bulb will click in your head when you start seeing it over and over and over.
Yeah. So I mean, right? It's not
Mm-hmm.
simplify it, and we'll keep going over this
Yes,
weekly for you guys.
absolutely.
Um, and you know what? Maybe next class, let's do a charting class,
Ooh.
and we'll put something together, and we'll have you guys maybe just
Ooh.
share one of your charts with us, and then we can review your guys' charts.
Oh,
A chart.
they will
It'll
grade you
be really, we
live.
do
We'll
more than one.
grade you live and just rip you to
Yes.
shreds, dude.
Yes. Just
Just
kidding.
kidding. Just kidding. It'll all be very constructive.
But yeah, no, let's would you guys like that for the next class? If you guys reviewed one of your charts with your levels and stuff?
Ooh, this will be fun. All right. I like this idea. This is a good one. This is a good one. Now I'm kind of excited, actually.
All right,
Finally,
let's do that.
instead of you guys
Um,
grading us, we get to grade you now. Ooh.
Next
Oh boy.
class, I'll post the announcements as well. So
Yes.
we'll get this done for you guys. But other than that, guys, I really do appreciate you guys for spending your time with us. We try to be fun, try to be serious. But at the end of the day, right, I want to see you guys win. And I think the best thing about trading is anybody can win at it, right?
Yeah.
It doesn't matter who you are, really your intelligence, right? You could be not very smart and
Yes.
be a billionaire from trading.
Mhm.
Really, honestly, the people who are the least smart tend to do the best in trading. I'm just going to put that out there. Um,
Because they're disciplined, not because they're
yes,
smart.
yes. But yeah, I mean, it's anybody can do this, and I think,
Mhm.
be honest with what you want out of it, right? And I go back to, let's end it on this. If you can pay, especially in the beginning or just even throughout your life, you have a career, right? And that's fine.
Huh?
There's nothing wrong about having a 9 to 5 or having a career, right? Everything is right for somebody, right? For some people, it's better than others. But this can pay a bill, a phone bill, a car note, even just a one trip of groceries. Like, especially in today's age, you get so caught up of like, well, if I'm not making 10 grand a month, I mean, if you guys are on Instagram, how many videos do you see? Like, you're an idiot if you aren't making 10 grand a month on the internet. Like,
Oh
come on,
God,
bro. It's like, I literally
bro.
turn it off because it's
If
like,
you're
it's so
21,
much.
you should be making 6 figures a month driving a
Yeah.
Lambo. Like what? What?
But
And
but
what
for
world
real,
are you
guys,
living in?
like, dude, let's be humble about it. Like, if you can pay a note, a car note, a bill,
Carno,
buy
insurance,
groceries,
groceries. Oh, a
anything,
date
right?
night, a
You are
vacation.
winning.
Yeah.
You are literally winning.
Yep.
Why? Because you press two buttons to make that happen. Let's be real. You
Ooh.
press two buttons to make that happen.
Yep.
So, this year, right? Let's just focus on slow compound and just get better and better, right? The more I rushed in the beginning, the more I wanted to just get rich quick, the
The longer it
faster
took.
the longer it
Yeah.
took,
The
the
longer it took.
more accounts I blew.
Absolutely. Mm-hmm.
100% true. It's
Absolutely.
right.
Yep.
If you can focus on this, the aspect of the trading, and you will get to the point where this is the game of buying, this is the game where, yeah, we're trading with money, but the money is just like a byproduct, right? And it is always a thought, but this is the game that I'm playing. Good entry, good exits. And sorry, my freaking dog wants to play. Good entry, good exits. Hey, that's the game. And then we can, from there, the money's the byproduct, right? So you'll get to that point where you're not
Yep.
even thinking about the money. You're just thinking about the the
Executing
the,
a good
the
trade.
executing. Yep, cool.
Yep. Absolutely. Guys, I want to say thank you as well for coming out. I really appreciate it, just Justin already said. And yeah, this was fun tonight. I'm looking forward to our class. Our next class, we're gonna grade some of your guys' charts and get a little more in depth there. So it should be fun. And you guys know what tomorrow is. It's Friday, one and done trading. Size for zero. And only trade if you're green on the week. You guys got it. See you guys early on the pre-market huddle. All
All
right.
right. Love you guys.
Peace.